All right. Doc here from North America. Good morning, good afternoon, and good evening. And how about the GameStop Circus Act, huh? I saw Janos had some stuff up on there on the Facebook yesterday. Um, I think I can explain that. I didn't really read everything about it, but I think I can explain it just from past experience. And let me see what we can do here. Anyway, let's start off with the currencies, and when we get to the indices, we'll go over to that subject matter. How's that sound? All right, so where are we at? Mr. Mouse, where are you? There you are. Just want to make sure we got the right mouse. There's so many of them around here. I love those Mises two pieces. All right, you can see here we start off with looking at the way the dollar is moving against the Swiss. Seems like it's a good surrogate to understanding what's going on here. So as this is rising, dollar is going up in value, and you can see right here, there was a little selling there, and now we seem to be doing the turn up here. You can see here on J4X, you see it's really unchanged. This is Hinky Ashy, so it's doing like some type of four-way averaging. So it kind of gives you a four-way of the highs, four times the high, or yeah, it's an average of the high, the low, the close, the open. It's all over the place. So it doesn't exactly reflect a leading indicator as much as it's a lagging indicator. But anyway, it works really well matching up to our dots. Notice that the dots, in this case here, even there's the volatility and signal, green and red. And you can see it starts to turn. I guess it was here. I say, no, not there. It's going down. We're coming to the end of it. We turn up with a green and red here, and you can see the strength starts to come in. You can see the white line starts to pierce the dotted line there. And you can see just a little firmness in here today, which means obviously the dollar is stronger. And the rest of the pairs trades in a generality are weaker. And that's how we review that and follow that. Let's see, what else can we say about that? Let me just take a sip of water here. All right, and so when looking at our Chicago Quant versus the J4X, let's make that a little bit clearer there. You see it's already trying to get into a daily buy there. You can see the weekly went into the buy here. I guess it was the end of this week. And it went up, and then it came down, and we were into a sell here, and you can see the weakness that occurred. And now we're flirting again on the upside. It looks like we're going to go into a daily buy today as long as it stays up in here. And it's widened that out, just the weekly quant. You can see here we are flirting with the weekly sell, and we'll see if that bounces off the zero line here and starts to turn back up. More of a sideways channel than anything else. It has been doing that. There's a lot of uncertainty out there, of policies and ideas and so forth. So money is trying to guess. And then you get these things with the stock indices. And, oh boy, Katie barred the door. It gets crazier and crazier. Which I'll explain when we go to the stock side what exactly that is. Hey, Stefan, how you doing? Good morning to you. Would you like to look at the XAU silver? Sure. Hey, Robin. Let's go take a look at silver. We jump, we move, we rock and roll around here. So let's go check out Silverado. So there is there's right there, and let's check it out. See that, Robin? Natural gas is still firm for today. We wrote something about that yesterday, Robin and I. There's the silver. We got a volatility signal going on. Let's give it a quick reshape. Okay, no, the volatility signal has gotten bounced now that we've given it a reshake. You can see the strength is trying, not really well. You can see the daily flirted with the sell yesterday and just hung on by the hair of its chinny chin. We are in a weekly sell since this week here ending, and then they smack-a-doodled it all. And you can see it's kind of, it was an interesting bounce. It was very interesting in the sense that it went into the sell here. I guess sell was even further back over. Is it there? Yeah, the sell was like there. And let's widen this so we can make it look a little bit more visible. Like that. There we are. And so, matter of fact, that doesn't even belong in there. What's that doing in there? Let's remove that. And remove that. And so it went into the cell back here. Matter of fact, that's not even a buy. What's up with that? And get rid of that one. And so you couldn't short it with this whole, with this breaking down here because we were in a weekly buy. Then we go into a weekly sell and you can short it and it's not exactly doing anything even more. So it really makes that 8.5. That's the 1.5 right there. And then you can see we get into a buy here, but we're in a sell. So again, it's been a lot of neutrality going on since it climbed up into the 26s. I can say that. And I guess if we move along and take a look at that. So what's that? There's the buy there. So that was okay. That was a winner chicken dinner. That sell couldn't be taken because we were in a buy. That buy could be taken and it was a loss. That buy was a... let's see, what was that? So that wow, this is really amazing how sloppy this has gotten since December, which is not that far off the hunt when it comes to crazy for a market. Markets get crazy in the December and in the late July, early August. Every year consistently they get real sloppy. That pushes us into the 8.5 instead of like 9 or 9.5. And you can see here, couldn't go short. As much as the daily told us it was downward pressure, and then it told us upwardly pressure, but there's a double dot there. So, and the next day, what do we get? We get a red dot, and still pushing up, and you can't get short again because you're in a weekly. So it really pushes us around in a neutral stance for a while there, and then it does it again here, and then it tries to do it again there, and real sloppy action going into that, always that Christmas month and the vacation period in the summertime. But that is where we are with it. It's not really very insightful. So you got to figure that some of our signals now are going to be very good, solely because of all that sloppiness to keep that 8.5 functional out of the 10. Now in this case here, you can see the daily has gone into a buy, but again, we're stuck in a weekly sell. So it's kind of a neutral thing there. Now there, it does look like yesterday, looks like it's trying to give us a sell, but in this, okay, yeah, so that might be, it didn't have it yesterday, now it is today. We're just going to leave it the way it is and just expect that if you do see another sell signal, take the short. Looks like that's the best way to describe it at this point. If we get a sell signal, take a short. In other words, we're in a weekly sell. If we can get into a daily sell, maybe they're going to pressure it through down to this 24 base. And right now we're at 25.46. So I hope that helps you out there, Stefan. Silver is, just come from the holidays, and it's just being all over the place. Now, I saw this really weird headline. Something about $1 trillion, something about the Federal Reserve, and silver is a buy or something like that. And I thought, I don't know about that, but, there's no doubt about, in other words, how they linked it that way, I'm not really sure in the sense of, to pretend that, but it was in zero hedge. I saw the headline. So what I'm really saying out of all this is I think that the next trade probably is a downside. And Robin was spotting some stuff that looked like it was trying to pop, but something was really off about the whole thing. Just doesn't seem to want to pop the metals. Okay, cool. I'm glad I was able to answer that. It's, we show our wares, good or bad. We document it. So, it's and as you can see, just on the fact check spreadsheet, we have it like that. 7 buy, 3 week sell, 7 day buy. Really sloppy. I'm not sure what they're trying to do, but it is sloppy right now, and I would assume maybe, and you could almost say if we contract this, and then I'll run away from it from here. But if we contract it, this could be an A, a B, and we're going to do some type of C on this side of it. Come challenge this 24-ish area. See if they make a new low, challenge that low. If not, and then maybe they get some momentum going. And I'm going to throw GameStop in there again. and that is that that GameStop thing and a group of other stocks are short squeezes. That's why the Russell 2000 has been running really, really strong. And that is probably what we're seeing out of it all. I think that's the best way to describe it. So, in other words, short squeezes. We have very thin markets, traders. Remember, I know I repeat this over and over and over again. Robin, I just saw UNG at 63.65 offer. It's all right. We made our money. Who cares? We sold it at 56 from a long side. We're not short it. We wrote it up. But anyway, there's a lot of thin trading that goes on because the days of institutional desks are very far and in between. Like a Deutsche Bank doesn't really have much of a trading desk anymore, and a Barclays Bank doesn't have much of a trading desk anymore, and a Citibank doesn't have much of a trading desk anymore. And I could go on and on and on, Santander, so forth and so on. Matter of fact, the JP Morgan, there's not much of a trading desk anymore. And most of these places try to facilitate their clients, but overall, the liquidity is not there anymore. And because of that, you get the crazy moves in the GameStop. And we all know GameStop wasn't worth, $117 or whatever it ran up to right in that area. It's just shorts covering, taking the loss. Again, that's a good reason to trade options with your hard delta. In other words, we call that a hard delta, the underlying product. Now, you don't see that in the currencies as much, which is nice. Boy, I'll tell you, that'll tell us something when we start seeing crazy squeezes like that in the currencies. Then we really know we're in deep, deep trouble on this planet when it comes to the world markets. But right now, it's just the equity markets, which are small. They're a small part of the world. Because of the bonds and all the other stuff that's going on. So, but anyway, that's where we are. And like I said, I will get to GameStop a little bit more as we get up into other products here. All right, let's go back to the currencies unless someone else wants to see something. So, let's see, where are we? Which mouse is it now? Come here, Mies. My Mises to pieces. All right, let's go back to. So there was the Swiss. Let's go take a look at Euro. And you can see Euro is trying to roll over. In other words, dollar is getting stronger, just like it's telling us here on the Swiss. And you can see we were in a weekly sell from here, but not much of a trading range really. We were in a daily sell from here, and we went into the weekly sell, and it gave us a little downside win, and nothing great about it at all. And now it's popped itself back up, and you can see now it's trying to roll over again, and if we get it looks like it's going to close in a sell. If it does, be short the euro for a little while. And so that's where that's at. Let's drift over to Mr. and Mrs. Cable. Oh, let me do this too, just for interest's sake. Control R. There we go, just to refresh it. And then let's go check out Mr. and Mrs. Cable. Same situation. They'll give that a Control R also. In other words, a reset. Let's widen that out. Boy, that's dragging along. Oh, let me just go back to that. Before I widened it out, I should have pointed this out. We've been in a weekly buy since here. I'm not sure what we were pointing out things with the long yellow line there. We're in a weekly buy since here, and it has gone up. There's no doubt about that. That's what usually happens when we get into weekly buys. Things find a way to go up in value, and if you can put up with the saber-tooth action that always occurs while that's going on, that's a pretty good thing. And if you're just trying to flip them, you get into a buy, then you try to buy it there, and hopefully get it out up in here and that type of thing. But you can see where we are flirting again with the daily sell right there. Let's widen that out. And our weekly is very firm. You see, specifically with this one, with a gas line versus a gas, you can see the white line is supporting the time manifold, and you can see it's the histogram is plus, and a lot of strength in there. They don't seem to be able to really crush this product. They just kind of take some profits and then they get out. Now in this case here, you can see the thing is up, and there's the highs of, I don't know, like 3 years right there. That 37ish stuff. We keep on thinking it's going to battle its way into the 38s and build a range between that and 42 over time. And I imagine if they let's take a look at it in J4X. Imagine if they can figure this lockdown stuff and get rid of it. I mean, lockdowns don't seem to work. None of this whole virus thing is. I'm just going to talk to you through math. All right, traders. Last year, 2020, more people lived than died than the year before. In general, just in the United States here. So in other words, we had less deaths overall. I don't care if they want to walk around and tell us how many there were 400,000 COVID deaths. Because guess what? COVID seems to cure cancer and heart disease. Because we had some of the lowest historic numbers in people dying with cancer and heart disease in the United States last year. So instead, they died of COVID. And overall, from January 1st, 2020 to December, 31st. Is there a 31st in December? Less people died than in 2019. And what's really weird is more people died in 2018 than 19. And more people, and less people died in 2020 than 2019. So, I mean, this is not the Spanish flu here, where you have an extra 18 million dead in 1 year. And at a time where the world only had 175. I don't even know what the United States had back then. Maybe 170 some odd million people, 140, 150. Who knows? But in the end result is we had 18 million more deaths across the planet than the year before it. Well, guess what? This year, less people died. So, and cancer patients and heart disease people were almost cured from the COVID. So, I don't know how you measure that. I'm just doing it through math, and I'm just telling you, this does not foot. It does not make sense as an alleged world pandemic. It just doesn't. And I can tell you financial things that occurred over the last year and a half that tip it off that people knew this was coming and so forth. So, lockdowns don't work, and I think maybe that's why the currency here, the cable, keeps on finding a way to go up in value, because once they wick up and get going again, this thing could really start to even move even better. I think that's the way to look at it. All right, now from here we jump over to the Turkish Lira right there. Let's put it up on Chicago Quant at the same time. So it's not that I'm a denier. It's just that the math is a denier. That's what the problem is. It's not me, Doc, that is a denier to this COVID situation. It's the math that's a denier. Yeah, and at the same time, you would have to give it enormous credit, saying, Jesus, COVID-19 is a cure for cancer and a cure for heart disease. Maybe we need to study it in a more positive way, not a negative way. Yeah, was it meant to be a cure for the world? You know what I mean? It can't be both ways, guys and gals. It's got to be it's got to be it's got to be one solid way, and that is that if less people are dying, this is not a pandemic. And that is the confusion of it all. You know what I mean? What else is there to say about that? I guess that's about it. Now let's take a look at this, the Turkish Lira. In a weekly sell, this thing I can't beat the dead horse enough times, was in a 54 weeks in a weekly buy. Went from the 5s to the 8.5s. Now it's in a weekly sell, and it's gone from the 8s down to the 7.5s. Where we're at now, 734. So this has been a fascinating product to watch. You can see we're in a daily sell now for about 4 or 5 days there, and you can see 3, 4, 5, 6 full weeks in a sell since this plateau thing up in the 8s. So let's move that over just a little bit more. It must have been even more, right? Yeah, that was even wilder. This was where they announced the political stuff, and then it finally got into the weekly sell here on the second layer of it. And Turkish Lira has been an interesting product to watch and see and so forth, you know. It has. All right, let's see. What else do we have to say about that? I'm not sure what else can we say about that, but it is definitely a fascinating, just a fascinating situation that's been going on. And so, that's the only way we can look at that. All right, we go from there to the Canadian because the Canadian, and I don't see any more questions, so that's good. Well, it's not good. It's actually bad. I like questions. And so let's go to the Canadian now. We look at the Canadian because a lot of times the Canadian and the Turkish lira have the same rhythm to them, which is kind of unique. I mean, economically and politically, they're like about furthest apart as you could be, I'd imagine. And so, what is that? Tell you what? Oh, tell you nothing, Microsoft. Okay, so you can see here, J4X. The Canadian's been moving up. You can see here we went into, where is it at? We went to a sell there. Why is that not filled in? Let's just steal one of these red ones. Move it over to there. Grab it again. All right, went into the sell there. And did nothing. Well, went up a little, went down a little bit, and then turned back up. And, because we're in a sell here. So we've been in a sell from this territory here on the weekly trend. So the daily gives you a sell. The next day it is a winner chicken dinner if you're fast enough to take the profit. And then now we are flirting with the buys again. Not there. Right there. Let's widen that out a little bit more. And so I guess maybe even one over. Right there maybe? Let's see. Let's see what that says. That's a minus. See, plot 1 is a minus. Plot, what is this? This is gas line 3, so it's plot 4 is a minus, so it was the next day. And that was a winner chicken dinner. But again, you can't play it because why, traders? Because we're in a weekly sell. And I don't want to see us get whipsawed too much in a market. So the best thing is to try to coordinate a daily buy with a weekly buy. Try to coordinate a daily sell with a weekly sell. Notice if it's in a weekly sell and it goes into a short, like right here, obviously it can be a winner chicken dinner. And vice versa. If it gives you that buy signal, just stand it aside or take your profits, one or the other, but don't get long because why again? We're in a weekly sell. So that is the natural tendency of it all there, traders. So now, interesting. So I guess that's the best. Ooh, so that I guess the best way to describe that is, just kind of keep on exploring, and we'll just keep on seeing. Nothing more than that can be said, I guess. And so then we drift to. We usually go. What we do is when we see oil, crude. When we see Canadian, we usually look at oil as we slip over to the NASCAD. These are currency pairs that seem to reflect the strength and weakness in the oil market, the energy market. So there's the NASCAD, which they refer to as the loonie, and you see the strength here. So you would say, okay, yeah. And then and the Canadian is kind of sideways to down, and it's in a weekly sell. So you would say, okay, overall oil should be moving up. So what we do is we go take a peek at oil. Where is it at? Right there. And then we go down to Earl. And sure enough, it is being firm, and it has been firm, just like, and you can see it's almost went into the weekly buy. What is that? That is November 27th, the close of that week. And if we go look at the currencies in the Canada, it went into a weekly sell on the 20th, a week beforehand. So it's going down like that. That means usually oil is going up. And then when we look at NASCAD, you know, it's these pairs that have a relationship with the energy market. Let's see, where's it at? NASCAD, there it is. And see where that's at. And so this thing's been in a weekly buy since October 30th. And so when we go back to the oil market, we go back to October 30th. Let's see what that looks like. So you can see here, it went into a sell on the week before the October 30th and then put a bottom in. We got some daily buy going on in here, which is the October 30th. And then it starts to flirt. We're using 5 there. And it's starting to flirt, and it won't, you know, it tries to go in. Look, like here, it's fascinating. It tries to go into the sell, and it is all wrong. Look at that. I mean, just all wrong. It gaps up, you know, plays back down to the gap. Still all wrong, you know. I mean, it does not make you any money whatsoever. You're losing money. And then we get into the buy, and that's what's wonderful about our math. At least you're not short. And it gets into the weekly buy, and that little loss there, cleaned up by this. It always does. Our math cleans up the problem, always. That's why you need to do money management, and you need to trade logically, because if you don't trade logically, you'll get in trouble. In other words, don't bet 80% of your portfolio on any trade or something like that. Bet 10% of your portfolio. You know, in other words, don't go out there thinking, okay, I'm going to make a $1.5 million over the next week because Doc says be long. You know, you got to do it slow and steady and build your pile up so that you can do stuff. Oh, hey, Middle Age, how you doing? Looking to book some profits in the April live cattle at 124.50 and hold the rest of it if we go higher. As you know, that subject change. As you know, that subject to change. Laugh out loud. Hey, Middle Age, no problem. I like to check it all out. What it is what it is. So let's run over to. Let's open up the cattle. Let's see what cattle looks like. Yeah. We'll just check it out. And there is April cattle. How about that? It came right up. Okay, yeah, we're still in the weekly buy since the 115 area. You know, and here's the winner chicken dinner right there in the April contract. Yeah, I don't blame you. Book some of that do re mi. You know, that's the smartest way. You know, Middle Age, and yeah, the grains and the meats have been fantastic for us. You know, the quant technology or quant trading is so much more. That's what the. Let me digress here. Let's let Doc be Doc. Let's digress. That's exactly what the problem is with the GameStop and all those Russell stocks. You know, we were in a buy on all that stuff, and it made no sense when everything else was in a sell. Now we know why. The short squeezes that are going on inside there. That's what the problem is. And I guess in some ways, you know, the fundamentals made people short or flat in the grains and in the meats. And, you know, our quants don't pay attention to any of that. You know, we can take a look and see. You know, so basically that's what it all comes down. And that's the answer to that. And so let's go look at the front month, because even the front month started to clean itself up, didn't it? Yeah. You know, we were back into the buy. Oh, no, we were still in the buy. And they were really threatening that sell-off in here. We were wondering what that was all about. And then, winner chicken dinner. Look at that. Zoom to the moon, Alice. From the 113 area, the low 113s, to now the high 117, or no, the low 117s. That's what that is. So not bad at all. Very interesting. That's the name of the game. All right, now what else can we say about this? Um, I'm trying to think what else we can say. I guess that's about it. Did we answer your question there, middle age? I like the idea of taking some profits up there, but and you're an options trader, so this is a good thing. You could literally go sell some calls on top of your long calls. Matter of fact, you could butterfly it. You could do something fun. You could make it like free. So in other words, like say with the product trading in the Aprils, I know you're trading April contract. So you could go and sell say the 126s or something like that twice, or do a trapezoid instead of a butterfly, and sell like the 126s, sell some 128s, and then go buy like a 130 or something like that. Something in there, and make the position on for free, and then let them grind their way up, or at least you don't lose any real money on the downside. You may not lose any real money on the downside, and then at the same time, you're still in the game. If they drag it up to 126 or 127, you're still like in Fat City, baby. You're making money. Money, money, money. And that's the name of the game. That's what it's all about, is to make money. We don't trade the trade. We trade to make money. So I know that might be a little... I know I'm using the scary words. This is an adult program. So I know I'm using scary words. Options. Calls. Puts. But strike prices. I know they're scary words. You know. But that I can say middle age trades those things, so we can speak optionese. And so that's where we're at right now. So yeah, think about that, middle age. Think about doing something called the trapezoid. The trapezoid is where you buy one strike price lower, sell a higher strike price, sell a higher strike price in that one, and then buy a strike price above that one, all in equal distance to each other, or right around equal distance. Yeah, well, Yellowfish, where you been? Welcome to the hood. One scary question I have. Only one? I've got dozens in my head all day long. How do some people seem to lose more than the premium when they trade options? That's because they're naked, just like the GameStop problem. That's how that works. You be always here. I like that. We be here too. We be all welcome to my neighborhood. Will you be? Will you be my friend? Yeah. So that's what it is. So what happens is that we're gonna go for the as we used to say on the trading floor. For all the married men with children, step off the floor for the moment. We're gonna have a conversation about options. So I don't want anybody to get hurt here. And so we used to say that when we were in wild pits where things were going totally nuts. Have all the married men with children leave the trading floor. It's too dangerous. So what happens is that what you really buy and sell in options is the option strike premium. Okay? You're buying the premium or you're selling the premium. You're buying the premium hoping it goes up in value. You're shorting the premium hoping it goes down in value. Okay? And the strike is a definitive price where it can be exercised, so you know where your delivery price is of the underlying product itself. Be it was cable. What are we looking at here right now? We're looking at cattle. So, like in this case here, it's the Feb cattle. It'd be the 116 when we're looking at cattle over here and we'll use currencies too. We're going to do it all now that we have an adult conversation going on here. For middle-aged muscle, he's trading and the product is traded up to 123.40. He's thinking to try to lighten up around 124 and a half. I'm saying to him, go out and sell the 124 and a half call, go sell the 127 call or 126 call, and you're long whatever is underneath. Move your whatever you're underneath, because I know you've been long these calls for a while. So if you're long, like say the 115 or 117, move it up to the 120 or 122 and sell out that, and then sell those other higher calls, and then go buy a call up on the top. Now that's kind of like that's called a trapezoid because of the mathematical configuration. And so then there's things called butterflies, which work the same way, except for what they do is he would buy, say, the 122 call, or it would be long the 122 or 120 call, either one. And if he's long the 120 call, then he might go short the 124 calls twice, and then go buy the 128 call on top of that. So it's buy one, sell two, buy one. And so the only risk you're taking is the amount of premium that it costs to buy that whole four-way spread. And same thing with the trapezoid. That's the only risk you're taking, is the amount of cost of buying that position. Now, in muscle management's or middle-aged muscle, middle-aged muscle, he's thinking, okay, I'm going to ditch some here in the 124s. Well, you could go do that right now. Just move up your call that you're long. Go sell those calls in the middle there in the 24s and 25s and 26s. Put it all on for free, and or close to it, and buy the call on the top. And I got a friend that is world renowned. The crash of '87, they stuck him on the front page of the Financial Times. Him and I are sometimes we're trading partners, and he's one of the Wall Street's world renowned option traders. Him and I trade together as a partnership sometimes. We do all kinds of different things. We yak to each other, so forth and so on. That's why I was up in Manhattan, had an apartment there. And so in the end result is that he likes to lopside them. So in other words, middle age, what he would do if this was he only trades stocks. He doesn't trade I don't know what it is. He cannot figure out futures for nothing. I mean, I don't get it. He just does not get along with futures. I guess it's because of the leverage, because option guys are really big on leverage and brokerage house, using brokerage house money, and it doesn't work the same way in futures. So that's why he doesn't do futures. So anyway, if he was trading this position, he might buy the 122 call. If you say you're along the 115 or 114, get rid of that big premium so it can't hurt you. Buy the 122 call. Go sell the 124 call, and maybe even the 125 call. Make it a little bit tighter. So it's like 122 to 124. That's too wide. So logic would be is you would go buy the 27 on the top. In other words, you make it too wide on the bottom that you make and lose 2 on the top, for 25 to 27. But he does some lopsided stuff in options. Boy, does he play with the dangerous ones, too. He does it with, he'll do it with Apple. He'll do it with, Netflix. He's doing it right now with Tesla. He texts me a week ago and says, I'm shorting Tesla. And so I sent him over a chart, and I go, okay, it looks like it's going into the sell. And what he does is a lopside. What I mean by lopside, he would go and buy the 28 instead of the 27. So in other words, he'd be long the 22, short the 24, short the 25, and instead of buying the 27 to be totally balanced, he might go buy the 28. So he puts it on for a credit to himself. And so he's pretty much covered till like 27 and change. And then he starts to lose some money, not a lot. And I mean, he likes to play that way, and he'll do odd ratios and odd lopsided spreads and stuff like that. So that's really the way to play this. All right, I'm sure I freaked a lot of us out here about talking options, but it happens once in a while. We get a little dirty. We got to talk a little hot sex, little hot market sex, optionese. All right, that's the way it goes. All right. So that's where it's at there, middle age. I'd say go throw the tops out, move that call that you have possibly down in the bottom. I think you told me you were in the 115s or 14s at one time. So get rid of those because there's a ton of premium in there, and it's intrinsic premium, which is bad, because this thing, it's going to act like a future on the downside. If they crush this thing, you get wackadoodle city. And then there's other ways to play it also with. I hate to do this, but talk about puts. and put spreads. Not going to do it. I promise, crowd, I'm not doing it, but just thought I'd throw it out there. You know, it's like watching the pretty girl go by in the very tight bikini. All right, there we go. All right, so now where are we at? We were looking at oil and NASCAD and Canadian, and let's drift back to the oil. And middle age, you can ask any other questions too. Don't be afraid, man. You know, I love talking dirty options. Lopsided, crazy spreads. Yeah, baby, yeah. You know, someday, I've explained it before on the Dukascopy webinar where you get the names straps, strangles, straddles, and strips. So straps, think about those words. Straps, strangles, straddles, and strips. These are option positions that traders have used. These are colloquialisms of words since the inception of listed options. I don't even want to go there about those clowns in the smoking drinking room at the Board of Trade that created the CBOE and created all these crazy names. But I can tell you, they weren't exactly functioning on financial thought. Let's put it that way. They were definitely into something deeper on the physical, personal side. Let's put it that way. And so and that's a real adult conversation for another day. All right, where do we go from here? There's crude. Let's take a look at the metals. Oh, you know what? While we're here, I can go to, we can do, let's do the oil. We might as well do the energy complex while we're here. So let's take a look at it. Let me save that too at the same time. Did I refresh it? Let me refresh it too. While we're here. And then if anybody wants to see anything, then we'll stop what we're doing and go look at it. So that's crude oil. And then, what is that all about? Move that out of the way. Something's on. Oh, it's one of these mice that are doing something. Okay, there. And then let's do, what's the next one? We take a look at Robo Gas. We can take a look at that right there. That's the gas oil that powers the automobiles. Let's give that a refresh. You can see that that's moving up also, the energy complex there, and we've been in a weekly buy in that thing since the that November 27th gig. And then natural gas. We put an article about that yesterday, and we even did a little trading in that. And let's give that a refresh. Natural gas is trying to perk its head up out of nowhere, which is kind of cool. You can see we've been in a weekly buy there for a few weeks, and now we're in a daily buy, and it's winner, winner, chicken dinner. And save that one. And so let's see what else we got going on here. And then last of them is what we do is we go over to the grain complex and take a look at bean oil, like right there. That's another one of those cruising along in that October 30th weekly buy. And that puppy is run from the low 33s, excuse me, 33s, 32s, something like that, all the way up to the 43s. So that's been a very good adventure. Let me take another sip of water here. I'm still excited about talking about straddles, straps, strangles, and strips. Not counting they use the word strike. I'm going to strike you. There's definitely an S&M thing going on there with those guys, I'll tell you. It's what happens when they're drinking and smoking on a trading floor. All right, they get weird in the cloakroom. You know, the CBOE, the Chicago Board of Options Exchange, which was owned by the Chicago Board of Trade, started in the cloakroom at the Chicago Board of Trade. That's where they started trading options. In the cloakroom itself. And then it exploded, and the CBOE cranked up. They bought the property across the road, and it's all history at this point. Let's see. Now that's bean oil. Did I refresh that? Let me just do a quick refresh again, just in case. There we go. And there is the bean oil being it. There we go. And that's the energy complex. So what we can do now is we can slide away over to the, let's take a look at the metals complex, since we were looking at silver. let's go back to that. Where is it? Let's go to right there. There we are. And let's go check out Mr. and Mrs. Silver again. Yeah, it was a really weird article. I didn't really get a chance to read it, but they were blaming the trillions that the Fed is going to do with the Treasury. Mrs. Yellen now is head of the Treasury, so they're just thinking that that could be wild times. Why they need silver instead of gold, I have no idea. But they said gold could be the thing that I'm not gold. I'm sorry, silver could be the thing that it starts to get bought up on. So we'll see. Now there is silver. Let's take a look at gold. Now gold is let's give that a quick Control R, and it's pretty much unchanged. You can see it's in a daily buy there for the last couple of days doing nothing. We're in the weekly sell, which means you can't take the daily buy. And I think we're going to be moving away from February soon. We're in January now, so I'd imagine. Hey, Robin, what was it? April maybe? I think April might be the gold next. So by by the end of today or tomorrow, we might be in the April gold. We'll have to check and see. Robin will check it out. Yeah, you know what I mean. That might be the next. I'm almost dead sure it's the April contract that everybody pays attention to. So, did I say that? Just do this. Like that. There we are. Because this thing must be getting very close to cash. Why don't we take a look at that real quick on J4X. And see what the arbitrageurs are doing with it. There it is right there. Trading at the 1853. 53 is bid for, 53 is offered. And you can see here, the futures is at 52. So yeah, I mean, there's, matter of fact, that's discounted. That's interesting. So it must be April at this point. That alone probably tells us if the spot is trading at 53 and the futures are trading at 52, then April is the next deal. So let's do this. Let's change it right in front of our eyes. Let's see. Let's do this. And is there an April around here? I don't see it yet, so let's make it. Futurama. GC. Look up. There it is. And it's the J1 right there. Close. And let's go to J1 right there. Oop, I didn't mean to do that. And then, and look at that. See, that's at least $6 now. So it's a premium. And it should be, because that's the way it usually works. Now, let's not do Marsh. Let's find the other product. There it is. We'll put the weekly in that way. And right there. So we're going to go to April now. This way we don't have to deal with it. That discount just told me that the future trading at a discount tells me that it's behind the curve at this point. And where did that go? There we are. April. Gold. We'll just go gold. There it is. April gold. Ta-da! And buys and sells are usually about the same. The arbitrageurs keep it all in line. And look at that. It tried to get into the buy there. Look at that by the hair of its chinny chin chin. This is 7. What was that? Plot 4 was, you know what? That tried to get into the buy. And then it failed again. That's interesting. And it's in the sell. So it went like buy, sell. And the buy was right there. But again, this is a back month, so I don't trust that. We'll just leave it like it is. And then the next time it gets into a buy, then it's real winner, winner, chicken dinner. You can see it's doing the same sloppy stuff here. So let's do this. Let's go with a save file. We're going with April gold now, traders, on the futures contract. Ta-da. Wow, it got quiet. Just because I start talking options. Ah, God, I hate that. It scares people away. Oh, I hate that. All right, I'm not going to use the scary words anymore, I promise. Let's see. Where do we go from here? So we got silver and gold. Let's take a look at platinum. Platinum right there. That's April platinum too, so that's cool. Move that over to there like that. That's been in the sell, but holding up. And let's give it a quick Control R. There we are. So that's that. That's the third metal. And then what we're going to do is we'll go take a look at copper. Copper is the fourth of the metals that we watch around here. And then there it is. And that is February copper, which probably means we should probably switch that. That's another one of those things we probably got to switch soon. So, skip the gold, Robin. Go to the copper and see if we can find that stuff, You have got me interested in options now. Yeah, well, we have to sell it to you in a brown paper bag because obviously it can be scary. Yeah. Are you over 21? How do you choose the expiration date? That's a good question. That is, first of all, you got to say you're over 21. I don't want to scare a minor. Okay, good. You're over 21. All right, so what happens is that we'll use middle age as a good example. Okay, middle age has been long the calls in the cattle market from I think like the tens. I think he's caught most of the wave there. He's bounced in and out a few times, but overall he's been long. Now, if you take a look at a product and you're just you just want to be long, and you don't want to take a lot of risk, you go out and you do the call option. You're buying a call option. I'm just going to leave it at that. We don't need to get too complicated here, because there might be some people out there that are under 21, and I don't want to scare anybody. And so I hate scaring minors. And so in the end result is that what you do is you choose a strike price because you want to be long, and let's say in the case of middle-aged muscle, he was long the calls, I think back in the 112 area or 114 or something like that, and it ran to 123. And so I would imagine you would buy just in general about a 3-month call, something like that, 2.5, 3-month call. It'll give you time. You can see when you here. Let's give you even a better. When you're looking at, let's go back to the cattle there for a second, since we're using that as the example. And we could use, and if anybody wants to see an example in say currencies or metals, just say so. And we'll find one of them, and I'll give you an example in those too. But when looking at like the cattle, the way Middle Age was playing the Aprils back months ago, you want to time is your friend in options. I know everybody writes these articles and tells you, oh, yeah, don't buy in time, blah blah blah. Pay the least you can in options, blah blah blah. It's not that. It's you can make your risk much more reduced if you just add more time, because then you don't get trapped into expiring options, and they move like a clock, in a countdown. So it starts off at 10 and goes to 0. And so the premium does. And then the option disappears. And so you want to buy time if you have a desire to be long something or you want to be short something. You want to buy some time, 3-4 months. Notice when we're looking at, in this case here, is this it? There's April, okay? And you can see it goes into the weekly buy here. But look at this. 3 weeks later or 4 weeks later, after making some nice money, they sell it down hard. It's still in a weekly buy, but now you're basically where it started 3.5 weeks later. And then it roars back up the next day. If you're in a short-term option and you bought the calls here and it's 4 weeks old, if you haven't taken this profit and all of a sudden that happens, all of a sudden you're like, you were up like, $2,000. Next thing you know is you're down, $50. And you're like, why didn't I take the profit? When Doc got his daily sell, why didn't I take that profit up in there? And so time is a good thing. Now what you can do is you can buy one option and sell another option against it and protect the expense. You can do all kinds of things. You can do calendar spreads and so forth. Yeah, is that where you were? 115. Yeah, I can't remember you saying that. Like when the product was down in there. I remember you went in and out of it a few times. I think Middle Age is part of the Chicago Quant Technologies group. So I remember him saying something about that at the time, and so that's really the key is time can be your friend if you use it right. And I mean, just buying it naked long can be expensive, but it's a lot cheaper than getting stopped out in the underlining product and then uh, and then watching it go back up again, and you go, I knew I was right. I knew I was right. How many times, traders, have you bought a position and went, oh man, I was in there and I got pushed out because it fell down from my stop, and now it's right back there again. And that's what options stop from happening. That allows you to be in there. So, Yellowfish, basically, what you want to do is you want to buy some time, like 3 months. You really do. You want to be, and if you don't want to put out that big a premium and deal with the decay of the option premium itself, go sell some calls way above it. Matter of fact, you could get, I almost said his name. You can get as wild as some of my experienced options friends, where in the case of like using Middle Age as an example, he bought the 115s. It's now at 123. I think it's like $1,000 a cent. So, he could have gone and sold, say, the 121s or 122s. He could have sold a couple of those up there and bought the 125s. And right now, he'd be a grand or two off from his profits, but he might have had 5 positions on instead of 1 position. In other words, relative wise. I don't know how many calls and puts calls he's involved in, but if he was long 5 naked longs, he might have been long, if he'd done it as a spread like that, he might have been long 25 of them, and risking the same amount of money as he did on the 1 lot. He might have had a 5 lot risking the same amount of money. And so that's how it really works out in the end. Now, when you're buying time, you're going out with a lot more, time. You want to play games like that. You want to do the option spreads. You really do, because it helps cut it back on the decay. It helps to reduce your risk. It limits your gain. But you know what? If you can buy 1 and then instead buy 5 of a different type of position for the same amount of financial risk as buying the long 1, you also open the doorway for 5 times more potential profit, which is really freaking cool. No wonder they were drinking and calling things straps, strangles, straddles, and strips. They were into indulgement. All right. So anyway, this is Doc. I think we've gotten to the end of this crazy particular one. I think we're going to label it as options and the underlining. Maybe I think that would be the title of this one. So this is Doc from North America, having a fun-filled day again with our brown paper bag filled with something that we're sipping on. And we will catch you again tomorrow on Happy to Hump Day, Wednesday. Thank you for the explanation, Doc. Hey, I hope it made some sense to you. Doc can get awful weird, so there's no doubt about that. Happy trails to you, Yellowfish. Until we meet again, middle-aged muscle. Happy trails to you, to all our trading friends.